The other stock to look at is Federal Bank. It's in focus. The bank's QIP received a very strong response from investors, raised more than 3,000 crores. To understand the plans and the outlook, Latha caught up with Shyam, Srinivasan, who's the MD and CEO of Federal Bank. Let's listen in.
Last year in the AGM, we had an approval for up to 4,000 crores of capital raise. And we did two parts. One is a QIP for 3,000. The other 1,000 is in the process of getting completed, which is, you may have also seen that there's a preferential allotment to IFC. So an existing shareholder looking to take up a higher share in the bank, and we're quite excited by that. On specific to QIP, like you mentioned, I think the subscription for the 3,040 to be specific, we had bids closer to 20,000 crores.
Okay.
Right? So it's quite a exciting one. I had done one in 2017 when we received, I think, close to 2.5 or 3 times. I thought that was good. This time, it was quite encouraging, exciting. The objective was very clear, right? We did want a wider range of investors to look at us. We did want people who think of us as long-term and not short-term. We did want a mix of domestic and foreign. I'm happy that you would have seen the list that has been put out. I think the process got completed late last night, so the shareholders have got their shares and they are hopefully happy shareholders, or will be very happy. It's been a nice and encouraging mix of people who are long-term shareholders from outside India, from domestic, from the large mutual fund houses. And what was most encouraging is the bids that came in were hefty and quite contested for. So we did have a brief moment of, can I get more kind of moment, right? More people asking us, can I get more of your, which is I think a good sign of confidence that the investors have placed in us. So all in all, it's a good one, and start to finish, it took us about maybe 5-6 weeks, but we are where we are today.
Okay. If you could just throw some numbers, where does this take you in terms of net worth, in terms of CRAR, more than anything else, capital adequacy?
At the end of the June quarter, we were close to 14.8. This will add another 1.4%. So we'll enter the 16 or so. And when hopefully the Pref process will complete on our AGM or around that time, once the regulatory approvals and the shareholder approvals come, it will take us to mid-16s, right? So that was one objective. In terms of the other part of the question was on QIP per se. A mix of investors have been, like I mentioned, both overseas and domestic.
A good breadth of investors.
Good breadth, yes.
Okay. Now, what do you do with the money? Are you expecting that you will be able to do much faster growth? Do you have an internal target in terms of advances growth?
No, I think the capital raise was to support the growth we've been talking of, right? We've been last few quarters, if you've seen, sequentially growing 4-5%.
Yes.
Right, and this quarter that went by, we registered a growth of about 20% Y-on-Y and sequentially about 4%.
Yes.
And Q1 is seasonally a low quarter, but we saw hefty growth. We believe that the 18-20 odd % growth that we are seeking to do is going to be aided by this. It's not like I would not.
Would there be more risk-weighted assets? Is that also part of
we have a risk.
Because you brought down your RWA.
No, the RWA shift between one quarter and the other, I did explain on the air, was only because of a timing difference. There were some unrated customers who just got rated or added on. So it was not a risk profile didn't change, it's just a timing issue. But the larger point is, our risk appetite is fairly framed. We don't want to sort of suddenly, because we have more money, take higher risk, right? I think to guide an 18-20% growth, we needed a certain capital adequacy. This process, we hit the triggers. Our internal triggers, if CET1 is in and around 13, then we need to look for a new capital raise. So over the last 10-11 years, if you've seen Federal Bank, which you have, we've been quite stingy about raising money. We've done one QIP in 2017 and one Pref in 2021. These are the only two. Happily, this time we did both on the same day, and for that 4,000 crore amount. And this is only to enable the 18-20 odd % growth that we are visualizing over the next 3 to 4 years. Our belief is this should keep us going for the next maybe 3.5-4 years if we grow at 18% and put back the profits that we will hopefully keep making and last year was good. If that momentum continues, we should see, capital showed up.
That was
well.
going to be my next question. So when do you expect to need capital again? Certainly not for 3-4 years, you're saying. Okay, where do you see growth? Which are the areas that are asking for loans?
I think our approach has been retail, wholesale, sort of weighted 55-45, retail 55, wholesale 45. We don't want to stray away from that. Within that, there are growth pockets. If you take our retail book, it's largely a secured book. We have a very small unsecured. When I say unsecured, credit cards, personal loans, and to some extent businesses like microfinance, gold, commercial vehicles. These are businesses that we have just about started. So if you take the last 18 months, these have grown at high double digit. High means like 40-50% growth. But they're growing off a very small base. On the whole, as an aggregate, unsecured is about less than 3% of our overall outstandings. We believe in a 3-year phase, as this growth will dictate, unsecured and retail part of unsecured part of retail will be probably about 10-15% of the whole book, right? So the growth opportunity, we are 1.2% share of credit market, right? I don't think we need to take crazy risk in any one area to grow, and that's been our model. We've moved from 0.76% share of assets to 1.25, 1.3, so gaining share. I believe we can go up to 2% share without taking any untoward disproportionate risk and still be rewarded for that. So broad-based.
Okay, that's Federal Bank and the expansion plans there.